Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Welcome back to the show, Mark.
Thanks for having me, Jim. It's always a pleasure. Thank you.
Mark, you have a special offer for our listeners. Can you explain what it is?
I sure do. Well, I can give our listeners a 50% discount on any of the products at VRTrader.com by using the promo code 2020 half off. That's 2020 HALFOFF, 2020 half off as the promo code. So when you go into the website and you order one of our newsletters at VRTrader.com, and we have a whole bunch of them in there, from gold letter, metals letter, to cannabis, to market timing, and so forth, just enter on the order screen where it says promo code 2020 half off, and you'll get 50% off.
Where are the stock markets in their bottoming process?
I didn't catch the question. I'm sorry.
Where are the stock markets in their bottoming process?
They are in the process of bottoming, if that's your question. And I don't know if we've seen the low or not. Ultimately, you can't compare market crashes to each other because there haven't been that many. We don't have a lot of statistics, but the general rule is you sort of form a bottom. And even though we had sort of a V bottom in 2009, it came after. That was a second low after we'd come down prior to that. So I'm bullish here. As I told you last week, I still think we're in a rally phase. My forecast model, which, by the way, is one of the products you could order on the VRTrader.com website, called for a low in mid-March and said we're going to rally out of here. And enough time still is left on that model that says I don't think the rally is over. Now, once we hit a rally peak here on the cyclical basis, which is coming, I can't tell you the exact date because we have to watch both the cyclical forecast and the technical numbers. But when it does come and we pull back the next time, perhaps in the summer or fall before the U.S. election, or maybe even before that possibly, we'll have to just watch the numbers. And certainly if we retested the lows or even made lower lows, which not too many people are talking about, most of the questions being raised are, hey, do you think we're going to retest the lows before we go higher? Well, maybe they fool everybody and they actually go to new lows and really shake them out, and then it turns up from there. So we'll just have to watch the numbers. So I think retest or lower lows is a strong possibility based on history. But at the moment, we're long the market, and we're just going to have to make a decision when we get out when we're going to get back in based on the way we read the numbers at the time. So that's the best answer I can give you. But I would also say, with all the money being spent, money printing going on, the intervention of the Federal Reserve and presumably the plunge protection team, which was created by Ronald Reagan back in 1988, it would seem to me that ultimately this stock market's going to be dramatically higher, whether it's the end of the year, next year, or the year after. So any weakness, particularly considerable weakness, if we actually post new lows, would be a great buying opportunity. But, we're already in there, and we'll see how much we get out of the current rally, and we'll take it from there.
Are any sectors looking bullish?
Well, last week we talked about, I believe I mentioned I was watching crude oil. So that's certainly looking positive here. Just a matter of the last couple days, you were hearing commentary all over the place how bad crude oil was acting, and perhaps it could even get down to $10 a barrel. And
looking at the charts, how oversold they were, the bottoming formations that were coming in. It was pretty clear to me that we're at or near a bottom. So, of course, a lot of news drove it up in the last few trading hours, but you're still looking at an oversold commodity, and the charts say there's a lot of upside potential. And, of course, a lot of this was manipulated. Prices were driven down intentionally so they can be manipulated back up again and reversed higher. And we saw the 10 million barrel agreement that Trump apparently worked out with the Saudis. And, of course, the Russians, it's to their favor to have higher prices as well. So a lot of this may have been conspiratorial to hurt the Canadian and U.S. markets. But what they didn't factor was, of course, the deep pockets of the governments here in the Western Hemisphere and their ability to support these companies and prevent them from going under and keep the energy independence going. So crude oil still looks like a play. Just have to, trade it accordingly, but we're in there. So I think there's more ahead. And who knows, it could be, a big bottom too. So we'll have to watch. I know everybody's negative based on the world economy and everything, but this is all being manipulated, and it's all going to reverse at some point here, hopefully sooner rather than later. GoldSilver still on our list. We caught and predicted, that we get a nice shakeout here in the last week or so, back into the mid-1400s. I think cyclically, they look better to me in the third and fourth quarter, but there's still holds if you want to be a little bit patient, because I think there's some bigger upside coming, particularly with all the printing presses going crazy around the world and money being spent left and right. And there's even talk about the gold standard again. Whether that happens, time will tell. And there's also apparently shortages of the metal. Much of it has to do with the fact that the producers can't produce now, but still, there's also some changes going on at the COMEX, which is a paper market, as you know, somewhat fraudulent, in my opinion, for many decades, but I think there's still action there. So gold and silver still look good. Cannabis stocks are still cheap. They've been in a bear market since they turned south last April. So we're running to almost a year of a correction in that market. They were overdone, but to me, there's not clear signs of a bottom, but some early signs that some may be trying to bottom here. So we're paying attention to some of those names. So I don't think that's over yet. And finally, the infrastructure stocks, names like Vulcan Materials, Martin Marietta Materials, U.S. Steel, Alcoa, with talk now of potential legislation to build U.S. infrastructure and spending, trillion or multi-trillion of dollars to do it. These companies would benefit. Concrete companies too. U.S. Concrete's another name. So we'll see if that legislation goes through or not. But certainly, this is a sector you got to keep an eye on, because if they really are serious about building out infrastructure, these companies are going to do really well. So that pretty much covers the hot areas that I see at the moment.
President Trump was talking about a stock market that will come roaring back following the virus scare. Do you think this is possible?
Sure, absolutely it's possible. It's happening right now in a way. We're getting this rally now, and many are dubious about it, thinking, as I mentioned previously, that we're going to come back down again and make new lows, and you shouldn't be rushed to be in the market. I don't disagree with that, but I'm also a trader. Yes, I think ultimately we're going to new all-time highs. I don't know if it's 1 year from now or 3 years from now, but, the lessons of 1987, 1929, 2008 and 9. Of course, you didn't have a virus running around the world, but, it's the interest to inflate prices and keep the public happy and spend money. And ultimately that will drive stocks higher. So if you're taking an intermediate to longer term view, there's bargains out there. If you try to fine tune it, then you try to trade a little bit, thinking, well, maybe they'll retest lows and maybe they'll make a lower low, and I shouldn't be putting all my money to work now. But I think the odds are increasing more and more that things are looking better. And we're getting into a whole other philosophical discussion whether this virus was an engineered situation or just purely accidental. But certainly, as I mentioned earlier in the interview, governments are seizing upon it to gain control and spend money and exercise authority. So it'll be real interesting how we come out of it. But I think everybody ultimately follows the dollar, and they all want to make money, and they'll figure out how to do it. And that means to me, the Dow will be through its 30,000 level, and I can't give you exact timing, but certainly, in the near term, time frame, like I say, it could be a year out, 2 years out till we get back. Of course, we'll have to just watch the numbers, but I'm more optimistic about the financial markets than I am about the loss of our personal freedoms.
April 7th will be another supermoon. Could it have any gravitational pull on the markets?
The moons always have some influence on the market. I highlighted it in my newsletter. In fact, April 1st was a half moon, if that's the correct terminology. I'm not a astronomer or an astrologist, and that turned out to be a low, which was yesterday, Wednesday. It was also April Fool's Day, so I made a little joke in my newsletter. Is this an April Fool's sell-off? And part of the reason I said that was because I saw the moon in its position, and generally, again, very generally, nothing, rock solid here, but it tends to work more than it doesn't. You get change of direction. So perhaps the 7th will be another little change point, high or low. Just have to watch our technical indicators, see if we're oversold or overbought, see whether sentiment is overly bullish or overly negative at that point, and make a decision. And none of it, again, Jim, it's not 100%. I mean, I've tracked this now for 30, 40 years on the lunar cycles, and there's a high level of confidence there. If you combine your technical indicators, sentiment, along with where the cycles are. So the answer to your question, watch the 7th, and we'll see where we're at in the market.
Is the U.S. dollar now the preferred safe haven instrument over gold and silver?
Gee, that I don't really know. Is U.S. dollar more desired? I know it's the only safe currency in the world. It's the last horse in the glue factory that's going to come down. That's for sure, as they say. I don't know if the common wisdom is old dollars versus gold, silver. I guess just thinking about it out loud, probably yes, because, it's liquid and you can do things with it. Gold is not as liquid. You have trouble getting your hands on it now and moving it around. But, those who are really trying to protect themselves long term, they know the store value is really in gold, not in currencies. So, it depends on really what your perspective is. I think short term, the dollar has been a very important ingredient in world finance, and even though the petrodollar seems to be going down a little bit, I think it's still a store of value for foreign companies and countries. But I'm just going to give you some more insight there. That's it. That's pretty much it. I guess the answer is yes. The other thing, I was going to mention, we've seen sort of a coincidental rally in stocks tied to the strength in the dollar too. So whether this chart pattern continues to work out, we had a little top in the dollar and it pulled back, and we saw stocks react accordingly, and then the dollar rallies again, and stocks respond accordingly. So there's a correlation there that you should pay attention to, is the dollar and the stock market. So at the moment, that would be my best response.
Do gold and silver look like they are poised to do anything?
Yes, I think they're going dramatically higher. Silver less so than gold, but I think it could take off. And as I mentioned earlier, we got that pullback into the mid-1400s, which I was looking for. Some of the shares in the metal look a little wishy-washy here on a very short-term basis. I'm more positive in the third and fourth quarter, but yes, the answer is yes. I think that they will be higher in the months and possibly years ahead. The big breakout number in my work would be in the high 1700s. If we get to that level based in U.S. dollars, that would probably set the tone for a move to 2000 and much higher levels.
We're hearing rumblings the U.S. Treasury might absorb the Federal Reserve, taking the control of money away from the bankers. Are you hearing anything on that?
No, I really haven't heard that. I think there was some talk about the U.S. Treasury taking more control over the Federal Reserve itself. I hope I understood your question.
When do you think the U.S. and the world might get back to work?
Gee, I would think in this April-May period. I think we're going to see this virus scare come to an end. And again, I'm just putting pieces together. I don't think we've necessarily seen the worst. Some saying we may have seen the worst, but I would think by mid-May, and that would probably be the end of it. Of course, that would tie in with sell may go away in the stock market. So things start improving, and it looks like things are better by May. That would be a perfect time for the market to be rallying into some type of short-term top and then start its normal corrective phase into the fall. So my guess is between now and mid-May.
Are real estate markets in the U.S. and Canada likely to weather the storm?
We hope so. I think commercial real estate may not do as well because, as we talked about earlier, people learning they can do a lot at home, and commercial real estate rental space may suffer a little bit as the realization comes, hey, gee, maybe I don't have to commute and go downtown and do all that stuff again. So residential, I think, will do fine if the economy comes back. Rates are still dead zero, so it's not a question of being able to get a mortgage. The question is, do you have your job back or not? And it depends how we pull out of this. If there's a lot of unemployment and people can't get their jobs back, then maybe I'm wrong and it'll take longer for home prices to recover. But I haven't seen a big sell-off in real estate values myself. I think I may be behind on some of the statistics. I think we'll have to wait. I'll have to wait on that one until I do a little bit more research. But my gut feeling is commercial would do worse than residential.
Mark, how can people find out more about the Leibovit VR newsletters?
VRtrader.com. That's the short name. VR stands for my technical tool, the volume reversal, which I use in my analysis, which is also available as a separate indicator at various platforms, but VRtrader.com, and I think we already covered that half-off special. So 2020 half-off if you go to VRtrader.com, and you get 50% off any of the products.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Mark, just before we went on air, we were holding our own little private discussion, wondering when will things, quote, get back to normal, and will things ever get back to what we used to think as normal?
Well, I don't think they're going to be at the way they were before because, as the expression goes, don't let a crisis go to waste. Government has imposed itself in a way that it really never has, at least in my lifetime. At least not in this country. So the fact that so much power has been exercised over us, ordering us to stay in our homes, and when, what we can do and how we should conduct ourselves, even though things may be lifted, I think the fact that it's been implemented is really a tragedy. We fought so hard for freedoms and independence. Men died for this. We went to world wars for this, and we're willing to give it all up because we're afraid about getting a virus. And, some people claim this virus is something above and beyond anything we've ever seen, almost extraterrestrial in a manner. Maybe it came from an asteroid, who knows, that landed here, or maybe an alien spacecraft. But everybody's directing our attention to China as the source. But though there are stories that it may have come out of a U.S. lab as well. But the fact that government all over the world, Federal Reserve on a financial level, with the ECB in Europe, what they're doing financially, police powers, presidential orders. It seems like in the future, the fact they've exercised so much authority, Jim, means that the drop of a hat, for whatever reason, they feel that the public is in jeopardy, or maybe more realistically, just the ability to do it will trigger them to instigate future such controls over us. There's been changes to the banking system now in Europe, from what I read, and the Federal Reserve has done unprecedented has made unprecedented actions here. U.S. Treasury getting involved, trillions of dollars being spent that we really don't have. It's just money that's being printed. There's so much disruption to the world economy and business. Not to mention the fact businesses are shut down. I'm sure many businesses won't survive. So when we come out of it, I don't think it'll be the same world. And even though we may think it's the same, it really isn't anymore. I really live in fear about the loss of our freedoms. And, they accuse Trump of trying to be a monarch or dictator. But look what governors are doing. Look what, local mayors are doing. Look what everybody is doing. So it's like, have some power, why not use it? I'm trying to stay at my house like a lot of people are. I try to go out and avoid getting sick, and I hear people are sick. And I'm not a doctor, I'm not a scientist, so I can't say that, this virus is more severe than any other flu virus that might have come around that could have hurt us in the past. Some people are saying that's the case. This is something really up and above anything else we've seen, and it's really destructive, so I'm not taking any chances, but I'm not sure if it's all true or not. Just got to take care of yourself, take your vitamins, exercise, and, as you would do in any situation, if somebody's sneezing or coughing and avoiding crowds is not a bad idea, whether we have a pandemic or not. So, long-winded answer. I don't think it'll be the same world, Jim, both in the financial markets and both in terms of our personal freedoms.
People are getting used to doing things on their own. Do-it-yourself sites on the internet, I'm sure, are seeing lots of hits. Will personal services take a big hit when people find out they don't need a haircut every 3 weeks or the latest Paris fashion?
It's a good point. My hair's getting pretty long, Jim.
Welcome back to the 70s.
I'm going to have to, figure that out. I remember I used to have a little kit to cut your hair and so forth, and I don't even know where it is anymore, and I was afraid to use it. I remember at the time that I would do such a butcher job of myself that I'd be afraid to even use it. But you're right, things like that. What about commercial real estate? Rentals and office space and so forth, and people find out they can work out of their home. I think there's going to be a big decline in office rentals in the months and years ahead when people find out that there's ways you can avoid commuting and moving in and out of an office situation. I've been working out of my house, since 1988. That's how far back I go. I used to be with brokerage firms in Chicago, take the commuter train in, dress up in your suit and tie, and do that routine. I did that for about 15 or 20 years, and then just decided that following the markets with technology, satellite at the time, now it's internet. Back then you got your stuff off satellite. You can do it from home. So yes, whether it's barbershops or commercial real estate or any other things, maybe people are going to be trying to grow their own vegetables. I had read recently, I don't know if you read this, a lot of people were buying chickens, like baby chicks. They were sold out of chickens, and people thinking they can have a little a supply of eggs in the backyard for themselves. So who knows? Maybe we're going to become more of an agrarian society where we work out of our house, grow our own food, and which is something I've always wanted to do and I started to do and never really finished, but it definitely has changed the world. So, I agree. There is going to be loss of a lot of business services that we might have normally seen that might disappear now.
Well, I could see the interest in chickens simply because the stores ran out of eggs.
Yeah, but you can't buy a chick.
Yeah.
You can't buy a chick. I mean, people were smart. They were buying chickens. Of course, in my house, the family here doesn't want chickens around. They think they're dirty and
they are.
Whatever. So I'd have to have a pen for them, and I honestly wouldn't know how to care for them, but I guess I'd have to learn fast.
We'll have more with Mark Leibovit right after this. A cousin of mine has chickens. He has 29 different varieties. You have no idea.
Who has it?
A cousin of mine.
And and that's in Vancouver?
No, he's in Sylvan Lake, Alberta, resort lakeside resort community between Edmonton and Calgary.
Oh, so he's an expert on chickens.
Oh, man. I had no idea there are chickens that look like they have fur on their feet. And, but also he has to keep them all separated because birds in particular hate other birds that look different than they do. And they will peck each other to death. But, yeah, it's fascinating.
Well, I wish I learned more about it, been around it, but I wasn't. So at one point, I wanted to have I had some animals, and when I was living in a different location, but more of the horse type animal, not the chicken type animal. So.
Well, I grew up on a farm, so I'm pretty familiar with critters, and we didn't have livestock because my parents liked to fish and explore. You have livestock, you're stuck at home 24 hours a day.
Right. Well, I was stuck taking care of 4 horses, and we actually had 2 llamas, believe it or not.
Oh, they're cool.
And a Shetland pony, and about 3 or 4 dogs, and a couple cats. So it was a zoo. You're right. It was a full-time job.
Yeah. And and when I was 12, I made the mistake of saying to my mom, "I'm bored. There's nothing to do." Fatal last words on a farm.
Go out and take care of the animals.
Oh, she made a to-do list on the blackboard. I bet you it's still there. With stuff that wasn't, you can paint the granaries. The barn needs to be cleaned up. How about cut the grass, water the garden, weed the garden? Oh, never say on a farm there's nothing to do. Welcome back. We're speaking with Mark Leibovit. Mark, is some kind of a deal being cooked up between the president, the Saudis, and Russians to limit oil production, and would that do much to boost prices?
Well, it already seems to have started happening. I don't know if I mentioned last week or not, but certainly of my clients, I was getting bullish on oil. If you look at the charts, it was virtually at the bottom. It was due for a technical rally, and it only made sense that President Trump or someone else would get involved here. And now we're hearing he's meeting with oil companies, I think tomorrow, Friday, and try to discuss strategy. And we also heard the Saudis are willing to take some action here, cut back production 10 million barrels a day. So the answer is yes, has happened. It was somewhat predictable. And I'm looking at the oil chart. It still looks cheap to me. So I think you'll probably see more coming there. I mean, basically, Russia and the Saudis were cutting their nose to spite their face. I mean, why cut the price and cut their income? And of course, they had motives, perhaps deleterious motives, with regard to cutting off Canadian and U.S. production of oil and bringing it down, particularly shale and stuff like that, bringing it down to a point where you couldn't afford to produce it. But anyway, I think you're going to see more of a bounce here. Whether it's a big bottom, I can't say, but could be happening. So it was all a manipulated event. It was a financial manipulation. So as easily as it was driven down, it could be driven up. So that's my opinion. I know a lot of people thinking. In fact, you may have heard in the last few days, I'm hearing predictions. Crude oil is going to go to $10. It's going to go even lower than where it is, and I was hearing that all over the financial press. I'm looking at the charts and saying we're at a bottom. They're bearish at the bottom. So let's see how far the rally goes.
The Russians try to collude and manipulate? I can't believe that.
Right.
But plus, perhaps the Russians don't understand just how deep the pockets are in Canada and the U.S. to make sure the energy industry doesn't go under.
Right, and that's true. That's true, because even if they didn't cut some type of deal and release their pressure on the prices, as you say, the powers that be here, they would finance the industries and keep them going. And I think that's what this meeting with President Trump was supposed to be about coming up here. Government would subsidize them and make sure they can produce all the oil they needed so we stay energy independent. So I think they made a mistake. They shouldn't have done what they've done.
We'll have more with Mark Leibovit right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, so many big companies are going to need to be bailed out if they're going to survive. Should they have been banned from buying back shares and instead keeping that money for a rainy day? And it's not just a rainy day, it's a hurricane right now.
You know, this gets down to a whole philosophical, moral question about how the U.S. financial system works. And, you know, for years and years we knew that companies, instead of improving or expanding their businesses, plant and equipment, research and so forth, were taking money and buying back their shares, and it became, a manipulation to help drive their stock price up. And this has happened all over the street. In fact, it's probably not a major company that hasn't done it. The big investment banking firms have been encouraging them to do it. And one of the reasons we've had such a bull market in the last 10 years, I would say, I wouldn't say mainly NASDAQ names, but certainly a great proportion of them, is because of the buyback issue. So it's a form of financial engineering, and it's part of the system. And then for us to come out and say, well, if it was bad, it shouldn't have been allowed to begin with. You say, well, gee, companies or at least the shareholders should be condemning their board of directors and their managers for taking these actions if the company is not being improved and all you're doing is buying back shares. But then they see the stock price go up, and they say, gee, we're making money. Maybe we should keep our mouth shut, because maybe if they spend the money in a more useful, productive manner, the shares won't do as well, and we won't be making as much money. And certainly the officers and directors, with their warrants and the benefits that are derived from that, they certainly want to see a higher share price. So, it's been going on for a long time. And it's like the uptick rule. You'd ask me a question about that, and whether that should be reversed for short selling. I mean, these things are in place. So, in one sense, you're taking away the freedom of the companies to do what they want to do with their money. It may not be the right thing to do, and I don't particularly agree that they should be buying back shares. I think they should be using the money for other purposes. But that's not my decision. It's the company's decision. So to answer your question, I've been sort of long-winded here. It's an encroachment on the freedom of the company and individual to tell you how to spend the money. And I know there's a crisis going on now, and people are saying, well, why are we going to give you money if you're not going to use it for a beneficial purpose? And this is where government authority comes in now, and they may choose to do that. They may say you can't buy back shares now, temporarily or in the future, but it certainly has been a precedent up to this point. And then it becomes a question of freedom of choice and who can tell who to do what and whether that should happen or not. So I don't have a real clear answer for you. I don't really care for share buybacks, but I guess if I owned shares in a company and I was making money because they were doing it from a purely capitalist point of view, I wouldn't want them to stop. So that's really the problem.
Mark, thank you so much for chatting with us.
My pleasure, Jim. Thank you.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters. You can find them online at vrtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.